Good evening, everybody. I am not late. It is 6:30. I wasn't even sure if I was going to stream, but I figured, you know what? Amit is sick. We're going to come out with something before Chris and I do Inside the Numbers. We're actually going to change Inside the Numbers to 9 o'clock. We have something else that has to happen beforehand. So I'll be with you for a little bit. Thank you for being here. Really appreciate it. And before I go any further and discuss the craziness that happened today, please freeze the video, pause it, read the disclaimer. I am not your financial advisor. I am not a financial advisor. Everything I say, my own opinion. Please do not make any decisions off of this. Do your own due diligence. This is for educational and entertainment purposes only. Okay. So, as I was saying on Friday night and over the weekend, I did not think this deal was going to get done with Netflix and Warner Brothers Discovery. It's cold out there. Get your coffee. Coffee is amazing. I need an IV of it. Starbucks should put me on the payroll. So, I had said on Saturday night and yesterday, and even on Amit's market close on Friday, that I think something's going to happen here. I think Larry Ellison's going to come over the top. And I think that this is going to be made very hard to get the deal done through the administration. I just don't see how you combine the number 1 and number 4 streaming services, or is it number 1 and number 3? I think it's number 1 and number 4, and have around 425 to 450 million subscribers. So, what happened today? And we actually got a lot of stuff. The CEO of Paramount, I believe it was, his first name is David, last name Ellison, was on CNBC today. We will watch it. But just as I predicted, Paramount came over the top this morning, and they came out with a new deal. $30 for every share in a tender offer. This is all cash versus Netflix's $27.75 per share in a mix of cash and Netflix stock. This deal is roughly $18 billion more cash to the Warner Brothers Discovery equity holders, and the synergies they're claiming is about $6 billion in cost savings from combining Warner Brothers Discovery with Paramount's assets. Now, Paramount detailed how they would fund this and address the big question that was made by WBD's board. And the Ellison family and Redbird Capital have agreed to backstop roughly $40 billion worth of equity capital. The debt and co-investors is a stack group. And here's where it gets interesting. All right, everybody? Remember, I said I needed to get a tinfoil hat out. I really need to get one. I need to make one. Are you ready for this? Affinity Partners. Does anybody know who Affinity Partners is? Jared Kushner has something to do with Affinity Partners. And then you got Saudi and Qatar sovereign wealth funds. I mean, I'm just saying. Tinfoil hat's not looking like so much tinfoil anymore. So the financing lineup is really amazing. I mean, you got backstopped by Larry Ellison, one of the richest men in the world. Direct line to the administration. A firm affiliated with Kushner coming in, and Warner Brothers board's immediate response today was that it will review Paramount's offer, but it is not changing its recommendation in favor of the Netflix deal at this time. It's not taking any action. Now, this is going to get really interesting. There's a lot of structural differences. So the Netflix deal, they buy the studios, they buy HBO, they buy HBO Max streaming platform. It excludes the cable networks, and those get spun into Discovery Global. And the consideration per share is $23.25 in cash, $4.50 in Netflix stock, plus shares of the spun off Discovery Global, which could be anywhere from like $2 to $4 at this point, is what the different stuff I've seen. The Paramount deal buys everything. It buys all of Warner Brothers assets, including the cable networks, in a single transaction. And the offer is now $30 per share, cash. This is what I said over the weekend. If we had the rollback feature, I said there's probably nothing more that President Trump wants than for CNN to be under the Ellison's control. That would mean instead of having MSNBC on the left, CNN left/middle, and then Fox on the right, most likely you would see CNN move more toward the middle and even toward the right under the Ellison's control. Tinfoil hat, that's probably one of the things that is going to tip it. My opinion. Just my opinion. No inside knowledge. I'm just saying I'm a conspiracy theorist on that one. Just the stars are aligning too much. So what's crazy is Netflix already agreed to one of the largest breakup fees in M&A history. So, and here's where things go a little weird. So if Warner Brothers Discovery ends up going to a different buyer, they actually owe Netflix $2.8 billion, which I have a feeling Larry Ellison will pick up. If regulators block Netflix after signing, Netflix will owe Warner Brothers Discovery $5.8 billion. There's really no lose situation for Warner Brothers because this stock was at $7, $8, $9 a year ago, and now they're getting an offer for $30 a share without changing really anything in the business. And we know these assets are never coming up again for sale, most likely. Netflix gets their hands on these assets, never coming back up for sale. Paramount, probably never coming back up for sale. And I have a feeling Warner Brothers Discovery has a little bit of negotiating power. They may be able to pull it off and say, listen, give us $30 a share plus pay Netflix the $2.8 billion we're on the hook for. If I was them negotiating, I'd be saying, you know what? We'll change the deal. Give us 32 a share plus pay them the 2.8 or we're going to Netflix. I mean, they got all the negotiating power right now. So I would definitely try to get that done. And Paramount's bid seems like it's going to get faster regulatory certainty. So we'll see. We'll see what happens. Now, Paramount's pitch is pro-Hollywood, pro-consumer, pro-competition. And I'm actually going to bring up the top streaming services. Just give me one sec. I should have freaking bookmarked this last night. I really should have. All right, here we go. Oh. A lot of these sites aren't freaking updated. What we know, you know, this is really annoying. I had it yesterday, couldn't find it now, and going into my history is just going to take a lot of time to try to find it. So Netflix is at around 300 million. HBO is at 105 or so. I'm trying to go through my history real quick. I click on so many things. I should have just bookmarked it. Anyway, let's get into one of these videos and I'll try to find it. But Warner Brothers stock was up a little bit today. Netflix's stock was down a little bit. And I think this leaves us in a really interesting position because now that Paramount offered Warner Brothers a tender offer, now they're obligated. Warner Brothers Discovery is obligated to now respond. And if they don't like the deal, they have to disclose everything they don't like. So this is getting really interesting. And I have seen one of these videos. I have not seen both of them, but I want to listen to, with everybody, Paramount CEO speak on CNBC today. And then I want to hear what the fast money traders had to say, because I did not get to hear their take. Guy Adami was on there. Tim Seymour was on there. It looks like I can't make out who the women are. Karen, I forget her last name, is on there, and someone else. So let's get into this.
With David Ellison, the chairman and CEO of Paramount, which this morning has launched a $30 all-cash tender offer to acquire Warner Brothers Discovery, a company that I believe you bid at the last count 6 times for.
Correct.
But did not come up with the prize that you sought, hence this morning's news. David, why are you doing this?
So look, we're really here to finish what we started. Like, just to kind of take you through the road in terms of how we got here. On December 1st, we made an offer to acquire Warner Brothers Discovery to their board. Had a conversation with David Zaslav. He came back with a bunch of issues. We then on December 4th sent in a bid that addressed every single one of them that is superior to the bid that they signed up. Our offer is $30 a share, all cash, $41 billion in equity that's backstopped by the Ellison family and Redbird, $54 billion in debt with commitments from Citi, Bank of America, and Apollo. We have faster regulatory certainty to close, and our deal is pro-consumer, it's pro-creative talent, it's pro-competition, and we believe that when you actually, to further contextualize, our $30 in cash, $30 a share, is basically $17.6 billion in cash more than the $23 in share that they signed up.
Right. Well, you're not obviously paying. You're paying for Global Networks. Their deal doesn't involve paying for Global Networks, which are traded as its public company. Which, by the way, also figures very prominently here in trying to determine what the overall value of the respective deals are, because there are 27.75, including obviously the stock portion of their deal, but it also includes, well, what's Global Networks? Is it a $2 stock? Is it a $4 stock? What do you see? Because that can go a long way in terms of at least determining why the board may have said, no, we think Netflix is superior.
So respectfully, we think that basically that's valued at $1 a share. I think if you
why $1?
So if you look at Versant and where the median of all of this is, it's about 4.5 times. You have to get to 5 times equity value or more to basically get to the kind of $3 plus that you're claiming. But again, I think the most important thing to go back here is, look, we're sitting on Wall Street where cash is still king. We are offering shareholders $17.6 billion more cash than the deal that they currently have signed up with Netflix. And we believe when they see what.
And I'm just going to say this, as a Warner Brother Discovery shareholder, give me the cash. Give me the 30 a share. If this board was smart, they would, and I think that they are, I think that they would try and negotiate with Larry Ellison and David Ellison directly and say, give us 32 or 33 plus pay the breakup fee. I mean, give me the cash. I don't want Netflix stock. Give me the cash.
What is currently in our offer, that's what they'll vote for.
Were you told during the process that cash is king?
Yes, absolutely. What we were told repeatedly was that they wanted all cash. We delivered all cash. We were asked that they wanted it to be fully backstopped by the Ellison family and Redbird. We delivered it fully backstopped by the Ellison family and Redbird. And when you look at the scale of the companies, right, look at the scale of Netflix. 310 million global subscribers. When you combine the number 1 streamer with the number 3 streamer, that creates a company that has unprecedented market power, north of 400 million subscribers. The next largest competitor is Disney with just under 200 million. That's bad for Hollywood. That's bad for the creative community. That's bad for consumers. And look at how the market is reacting to this deal. We are literally seeing talent talking about the death of movie theaters. We've all heard Ted Sarandos' comments about how he feels about the theatrical experience. And you've also seen, and our deal is also offering more cash for shareholders.
They split it up into 2. Just give me 1 sec. I'm going to play the second half of it.
is worth right. It's within the collar. It's worth at least $3.50 a share to the deal. I mean, saying our cash versus theirs doesn't seem a fair comparison, David.
So, Father, respectfully, I disagree. I mean, look, those shareholders can basically go buy Netflix Netflix stock in the open market if they want to, and they're going to be sitting there with a linear stub that's valued at $1 a share, which is a business that's in secular decline. That without the synergies that's basically created by our deal, they will ultimately be holding something that is not worth anything. By every metric you can look at, we believe that our offer is superior to shareholders.
Right. And again, we're going to get a lot of debate around the value of that stub, because even though it's an incremental, let's call it difference of $2, it can go to the value judgment. Let me ask you about Paramount, though. If in fact you are successful here, you're taking on a lot of debt, right? I mean, and you're diluting your own shareholders significantly through an inclusion of $41 billion in equity. Isn't that correct?
Yeah, but look, we're the largest shareholder of basically the Paramount Class B common stock.
We being
the Ellison family. We will also be the largest investor in this deal. We're literally sitting here today because we are fighting for our shareholders, and we're also fighting for the shareholders of Warner Brothers Discovery. And from that standpoint, this deal is accretive to our shareholders. You know, when you look at what the combined business would be with the synergies that you put through it, round numbers, $70 billion in top line revenue. We get to $16 billion in EBITDA very quickly, and it generates $10 billion in cash flow. What we're creating by putting these two companies together is a real competitor to Netflix, a real competitor to Amazon, a real competitor to Disney, not something that is so anti-competitive. There will be no more competition in Hollywood if this deal is allowed to come to pass.
Is it an existential issue for you, though, if you don't succeed here, David?
Look, as we've said on our earnings call, we believe in our standalone business. We have a great plan. But very simply, we made the highest offer for the company. $30 in cash is more than 23.
Right. But when it comes to Paramount itself, if you aren't successful here, you have confidence that you still have the scale? I mean, we've had this conversation before.
No.
I would assume that you're going to try and figure something else out, because there is a sense that you don't have the scale to compete in this world.
As we've said, we can absolutely, this is a buy versus build. We absolutely have a path to be able to build. But again, when we actually sit here today, having put forth the most value for shareholders for Warner Brothers Discovery, we believe that they need to be able to evaluate that offer. And that's why we're taking it directly to the shareholders.
I asked you about the president, but I'd love to come back to that. I mean, do you sense that he is in your corner here?
What I would say is I'm incredibly grateful for the relationship that I have with the president. And I also believe he believes in competition.
I mean, how he's saying that with a straight face, I don't know.
And when you fundamentally look at the marketplace, allowing the #1 streaming service to combine with the #3 streaming service is anti-competitive. And this whole notion of category ambiguity, forgive me, David, you've been doing this a long time.
Yes, I have.
Like, I don't buy it.
You don't buy it. In other words, their argument, and John Malone made this argument with me, it's not about streamers. It's about TikTok and Instagram and YouTube.
I'm sorry. Let's follow that analogy for a second, right? Okay. That's like saying Coke can buy Pepsi, that they're both beverages because Budweiser is a substitute for Coke. That's not a realistic argument. Now let's actually look at it from the talent community. The greatest showrunners in the world, you know, David Benioff is not going to take the next Game of Thrones to basically TikTok or to Instagram. They're going to take it to Netflix. They're going to take it to Amazon. They're going to take it to Apple. They're going to take it to HBO Max. They're going to take it to Paramount Plus. That's not actually how the ecosystem works. If this deal is allowed to come to pass, it is anti-competitive, and it is a horrible deal for Hollywood. And as someone who spent the last 15 years of my life producing movies and television shows, this is an industry that I love. This is an existential moment for our business. And we believe that what we are offering is better for Hollywood, it's better for the customers, and it's pro-competitive.
Netflix.
All right. So I did find the stats. So we just used an AI overview from Gemini. I think we can all kind of trust this. Netflix is the largest with over 300 million. Then you got Amazon Prime at 200 million. Disney Plus at 150 million. Then you got Tencent Video in China, 120 million. Another Chinese one, IQIYI, 100 million. Max, 120 million, which includes Discovery Plus. And then Paramount, 77 million. Then Hulu, 55 million. I have to say that while you can make an argument, and I can make an argument that if Netflix acquires Max, it will not be a monopoly. All I would have to say is, well, Amazon Prime's got 200 million. They produce original content. They produce movies. They own MGM. Disney Plus, they own LucasArts. They own Marvel. They own Disney. They have 150 million. The two of them combined. And then you look at Hulu, another 55 million there, gets you to around 400. The combination of Netflix and Max is roughly 420. It's roughly half and half with the top players in the US. So is it monopoly? No, but does it constrain competition? Absolutely. On the flip side, I would say this would not be good for competition with Netflix combining with Max, because you now have a huge library that is now direct to consumer. Is anything coming out? And I don't go to the movies often, okay? I think we all know that. I ran the poll the other night when we had about 700 people on. And if I remember correctly, the poll was 73% does not go see 3 or more movies in a year. And then when we dropped it down to 1 movie, I think it was something like 70 or 80% go see 1 movie a year. So the majority of people are not seeing 1 movie a quarter, let alone 1 movie every third of the year. So the movie industry is already hurting. Putting Warner Brothers Studio into Netflix likely would really hurt the movie industry from a cinema complex experience. It would also hurt a lot of other things with consolidating that much power into the Netflix array for Hollywood actors. So I don't know. It gets really interesting, but I think it would be much better for consumers if Max and Paramount combined, because you're still not at 200 million. They're still under Amazon and just above Disney. And now you have a real power play happening because there's tremendous competition. The synergy between Max and Paramount, and I get it, you may shut down either Paramount or Warner Brothers Studio, or you merge them and create the synergies. I'm not exactly sure how that would work. If I was on the Netflix side, I would say, look, it's actually great because we're going to keep Warner Brothers Studio alive. We're going to run all of our stuff through there. Whereas the combination of Max and Paramount, you may see one of those storybook houses disintegrate and leave. So there's a lot of things that need to get said, without a question. I do think, and I said this before all this stuff happened, that I think Ellison's going to come over the top, and I think ultimately Paramount's going to get it. And I'm sticking by that right now. I could change my mind in a week. I could change my mind in a month. But I feel right now, due to the ties to the administration, due to antitrust, I do think that Paramount Max is going to happen, not Netflix. Let's see what the fast money traders have to say. I have not seen this video yet. It's going to be very interesting to see what Guy Adami and them think. Getting quicker the transitions, everyone.
For WBD, MoffettNathanson's Robert Fishman joins us.
Wait, I'm sorry. This is one I want to watch also, but it's not the one I was talking about. While I was trying to get quicker for everybody, I brought up the wrong video, of course. Here we go.
Netflix co-CEO Ted Sarandos speaking at a conference this afternoon saying he is, quote, super confident his company will end up the winner, but shareholders don't seem too excited about the deal. Netflix stock has lost nearly 12% in just last week. So how do we trade this here? On Friday, we had the dynamic where we had the 2 bids. We didn't have a higher offer from Paramount Skydance yet. And you guys were wondering, since you're both in WBD, why isn't WBD higher?
Well, why weren't my options moving? And so I'm long calls and the stock, and I added the calls, sometime early last week when I sensed that this was going to be a bidding war. And obviously, there is an element in terms of the shares where there's some part of this that's still going to probably hang open until we don't know where this is going to go. We don't know where the Warner Brothers board will decide. We don't know where the regulators will be. So there's that period where my January 16 expiry might actually run out of some steam. And ultimately, there's so much value that you can try to break down in the company. I actually think this deal, I think the Paramount offer is clearly, the P-Sky offer is clearly superior. I do think it's fascinating to hear, like we've got, Warner Brothers, basically saying we've got support of the board, Paramount saying we've got support of the president. And you have a lot of different dynamics here in terms of also just what are they really valuing the core business for, or the streaming business, I should say, and that of the entire company.
Right.
Because it seems like there's a almost $6 billion valuation for something that the David Ellison is saying is, we're putting $1 of value on that in terms of the share price.
What do you call, Karen?
Risk arbitrageur. It's a French word.
Yeah.
Not risk
So-
arbitrageur.
So it's 27 and, it's not trading up to 30.
It's not trading
Which
up to 30.
speaks volumes, I think,
Well-
in terms of how this deal is being perceived.
Yes, but it's not. I think what it is, the nuance is the time to close is so long, right? So nobody knows how long it'll be. And we got a bunch of, potential antitrust for either side. I understand the Paramount argument. The Paramount thinks they have the upper hand in that regard. But so you have a long time to go. That generally doesn't trade well. ARBs are very short-term focused. And so I think that I don't think it's over. I think that the background to the offer, which was a super interesting Paramount's view of what happened and how they were sort of shunted to the side, I thought it was really interesting. The one thing I would argue is they said they didn't even let us come with our best and final. I don't know why they didn't come up with their best and final at the time where all the bids were due. I mean, in the UK, if you say best and final, you have one shot, that's it. And so that was sort of interesting to me. I think Netflix, they come back with something. And I think what they can do, we now see their stock is trading below the bottom of the collar, means that deal is not worth quite as much as they said. So that's a weakness in their deal. But they're Netflix. They can put a wider collar on. They can put up more shares. They could do a lot of different things. I think we'll see them come back. And then obviously if Paramount had said, well, we didn't even come with our best and final, we know they have more there. So I think it's going to play out kind of slowly, though.
Yeah, I don't know if
Not enough
$30
for January. I don't know.
is the ceiling here, but it's the short-term ceiling. So then you say, what's the risk reward? So $2.50 to the upside, so it's at 10%-ish. Downside, this started at about $18. I don't think it's going back to 18, but could you see it in the low 20s again? Yeah, if some of the rhetoric around this heats up in terms of people backing away, yeah, it could happen. I think Netflix is the play, though. And you look at Netflix now traded 2 times normal volume. You're getting it at a valuation you probably haven't seen in a while. I think a lot of the concern about growth is sort of dismissed or now in the stock. And I think that whole concern about them buying WBD and maybe having to pay up, I think that's more than in the stock now. So I think Netflix, given the fact that we traded down to the prior all-time high in February and seemingly are holding, is interesting to me.
You agree, Court?
Yeah, well, I think what it's going to come down to is what are the cable channels really worth? And I think that's what people are trying to figure out here, because if they are worth more than $2.25 a share, then it makes more sense for Netflix. That's what Paramount is arguing, is it's not worth that, in which their deal is actually better. And they have better regulatory approval process, so they say. But I think it's also pretty interesting here because when you take a look at it, HBO subscribers have a really large overlap with Netflix. So there actually could be some cost dyssynergies there. That is it actually worth Netflix to get this deal? And I think that's what people are questioning right now. So I think a lot of people are actually favoring Paramount, though I think we're going to have to see how it plays out.
So let's see what I'm going to just go through the comments. Let me know what everybody thinks. I'm just going to go rapid fire through the comments. Wait, whoa. Tanner crashed out, ended his stream, and broke a monitor. What happened to Tanner? Did something seriously happen with Tanner today? I'll have to call him in a little bit to see if he's okay. Yeah, well, look, Warner Brothers was a painful hold if you got it the way I did with the SpinCo from AT&T, but AT&T has rallied and paid a dividend, so I mean, hasn't sucked. Do I like Netflix valuation without Warner Brothers? I don't follow Netflix, but you know what? Since everybody liked the fact that I was building out the sheets live the other night, I'm happy to build it out right now for everybody and take a look. I really don't mind. Happy to do it. Just give me a moment. All right, so let's put them against. I mean, I don't even know who to put Netflix against at this point. So we'll put them against Microsoft since I just became a shareholder of them. Let's do that. And then we'll put them, then we'll do it against Warner Brothers and we'll see if it's accretive and whatnot. So we'll build it out live. Just give me one sec. I swear to God, I got to get a boom arm for this microphone that's right in front of me. Tantrum Tanner. I'm going to have to call him and see what the hell happened if you guys are saying Tantrum Tanner. All right, Netflix. And I like everything to look the same. I'm not OCD, but I just think it's nice for the viewers. So. All right. Let me get all the numbers. So for those of you who didn't see the stream yesterday, the way that I do everything is on a TTM basis. So I'll put that here. TTM basis. Bold it. All right. We need the market cap first. Throw that on. I feel like they do more EBITDA than I thought they did, but I don't really follow them. So I don't know why I'm surprised. Great free cash flow coming up, everyone. Great free cash flow. Net income. Oh, they must get some tax credits or something. I have to look into that. That's why I like free cash flow so much. It's a harder number to distort. All right. Margins are good, but guess what? They're not impressive. I mean, for a streaming company, I would have thought that their margins would have been better. And it's not cheap. It is not cheap. I mean, you're able to think about this, okay? And before anybody starts criticizing for what I'm about to say, really think about this. You're looking for value out of the deal. You can pay 25 times for Microsoft's cash from operations, which is $147 billion. Or you could pay 43 times for Netflix's $9.6 billion. That's not good value, in my opinion. It's just not. I mean, obviously, Netflix is a great company. Obviously, they have a lot of growth ahead of them, but the way the company is just on the underlying business metrics today is not interesting to me by any means. Not the reason I'm using Microsoft is because I just became a shareholder. So I'm thinking, what if I had allocated that money to Netflix? Now, you want me to put in Google? I have Google here. So I can bring down Google and we can look at Google next to it. I have some other ones done also. I mean, even Google, 25 times price from Cash Apps. And I don't care about the price to free cash flow because we know Alphabet and Microsoft are spending a tremendous amount on CapEx. But the net income is lower than Netflix. Price to EBITDA is lower than Netflix. And it's tremendously more. So, we're going to do a whole episode on TKA Group. I should have became a shareholder. I said I wanted to buy them off the jump. I didn't. I was buying other things. And you know what I'm going to do? I am not going to look at it. We're going to do it live where I have no idea what the numbers are going to be. And we'll do it together. For those of you asking, yes, this spreadsheet, I actually, thank you for reminding me. I'm going to do it right now. So I said I was going to put a post out for the members of my channel. I am putting it out right now. We're going to title it Valuations and CapEx. And it is on the Milk Gang's site right now. So it is live on the post, so you guys can grab it. Let me just make sure that. Just give me one moment and I'll go back to it. All right. I just updated. So anybody who has the link can get it. They can download it. You can't edit it, but you can make a copy. I have a lot of tabs on here. The tab we are looking at is called Margins. I will make it prettier and blah, blah, blah. Do that maybe right after I end the video. So we had said that we were going to do Warner Brothers Discovery next to them. And on the margin one, you just got to keep going down. I got a lot of stuff on here, a lot of different things. So let's move Alphabet out to over here. Let's do Warner Brothers Discovery. And let's see what they look like compared to Netflix. Man, that market cap has moved. That market cap has moved up so much. Wow. Wow, wow, wow. This is probably going to make the market cap moving this much is probably going to make these multiples look horrible. All right. Operating income. Yeah, they are just not, they're really not that profitable by any means. I guess I got to take that back when we start talking about free cash flow. They're producing a lot of free cash flow. I mean, they're doing almost, think about this. They're doing almost half of Netflix's free cash flow. I mean, what's the exact number? They're doing 46% of Netflix's free cash flow. Not bad for the market cap that they're at, right? Very interesting. Margins are not going to be good. We know that. Yeah. Multiples probably are not going to be good. You know what? Price to EBITDA is very low. That's really enticing. Operating income's not horrible. Price to cash ops is awesome. Price to free cash flow is awesome. Price to net income sucks. Listen, if I was to look at this from a long-term perspective, let me bring up their cash flow statement. Let's look at this together because I do not really pay that much attention to Warner Brothers Discovery. Let's see how much debt they're issuing and paying down in the trailing 12. All right. So here's the thing. Warner Brothers Discovery issued $21.85 billion in debt in the past 12 months, but they repaid almost $26 billion. So they've shed almost $4 billion off of their debt load. So they're paying down debt. Think about this. The past 4 years since this spin out happened or whatever it was, they've issued less debt than they've paid down. Let's look at the balance sheet real quick and see where we're at. So they got a lot of cash on hand, $4 billion cash. $1.3 billion basically in long-term investments. Okay. Yeah, look at that debt. Look at the long-term debt just go down. They've whacked about $15 billion off of their long-term debt. I mean, that's definitely changing their debt to EBITDA ratio because the EBITDA has got to be going up, I'd have to think. We'll look at it in a sec. Yeah, this has been interesting. I said to him at 9, like the book value, he'll even say it, that I was saying that we need to look deeper into this. So you can't freaking own everything, right? I mean, I do own it. I just didn't buy more. Yeah, Warner Brothers Discovery is an interesting company. And I got to tell you, when you think about taking assets off the table, and I'm mad as an Apple shareholder, I'm mad that Apple didn't buy them last year when I was writing about the fact that they should buy them. Apple should have taken this piece off of the table, but they didn't. And I don't know why they didn't. Didn't make sense. All right, let's get back to the comments. Jace, thank you for becoming a member. Really appreciate it. Ray, thank you so much for being here. Really appreciate it. Yeah, Joy, look, I don't sell courses. I don't do any of that stuff. The only reason that there's a paywall on the members only content is because we do an after hours show on Friday nights after FinTech Weekly. That's for members only on all of our channels. And I also put the spreadsheets up there. Sometimes I put other videos up there, but that's the real reason why there's a wall on it. But 98% of the videos that I do are just on freaking YouTube. At a restaurant that makes milkshakes. I mean, listen, pretty sure I can make a damn good milkshake. NVIDIA is going to go down this year, and it's because there's an energy problem in the U.S. I mean, there's definitely we need more freaking infrastructure for utilities. There's no question about that. What's the next 10x stock? If I knew, I'd tell you. I have no freaking clue. I don't have any ideas like SoFi or Palantir the way that I did. The only one that is under the radar that I've been buying that I think is going to do well, and this is just my opinion, I have no idea what they're going to do, but I wrote an article on a company called QXO that nobody's ever heard of. I'll bring it up on my Seeking Alpha. So I am the last person to write an article on QXO. Oh, QXO broke 21 today. Look at that. So I wrote this article on October 28th. It's up 17.5%. Usually I talk about all of the things that I'm doing before YouTube on Seeking Alpha. So if you follow me on Seeking Alpha, I write a lot of articles. I mean, just from the beginning of November, I mean, a lot of articles. Probably 25 or 30 since the beginning of November. So you can see a lot of my stuff on Seeking Alpha that I do. I mean, I'm an Apple shareholder. If I had the money to buy all of Apple, I would, just to fire Tim Cook. Obviously, I don't have that type of money. Have I seen Double Impact? Come on now. Come on now. And yeah, look, Pamela makes a very good point. I am an independent, and I normally don't talk about politics. The only reason I'm bringing up the administration here is just because of Larry Ellison, and I do think that it's going to impact this deal. So I'm not saying anything one way or another. It's just my opinion that I do think that when you follow the money on who is involved in this and what the ties are, I do think there's going to be a political factor that we have to consider here. Buy Shake Shack. You know, that's a Josh Brown. That is a Josh Brown stock. I should look at Shake Shack. You know what? We'll look at Shake Shack in a minute. Let me keep going through these. We'll throw a little valuation thingy up there. I mean, are we bag holders? I'd have to go back and look and see what Warner Brothers Discovery got spun out as. I actually have no clue. Hold on. Do you know when we got issued shares and what it came out at? I really don't remember. I have no idea what FRMI is. I'm sorry. Yeah, Amcor is something that a lot of people have been talking about. I'm not into it. I should just take a look at it. Who do I think should replace Tim Cook? Anybody except for Tim Cook. I mean, the last straw was the fact that they freaking put out a sock. I mean, come on. You're Apple. Don't start selling a sock. I mean, have you all you seen this? I mean, I'm sorry, but this is freaking ridiculous. This is, and this isn't a joke. They legitimately bought this. And I am so happy that Amit did not buy one from when we went out to dinner to carry his freaking cell phone. I would have lost my shit. Look at this. This is what they're doing instead of allocating capital to CapEx. And for this stupid thing, you guys ready for how much money this is? Yeah, a piece of cloth. The hell out of here. $149.95 for their short strap and $229.95 for a long strap. Who the hell does Apple think they are? Who? Who the hell do they think they are? They have lost their damn minds. Apple has lost their damn minds. And for everybody that thinks, and we're going to go back to the spreadsheet that I just put in the post for the Milk Gang members. I guess we're going into an Apple rant right now because I'm angry. So for everybody who thinks that Apple not spending on CapEx was a good idea, okay, it wasn't. So over the past 5 years, Apple has spent $55 billion. Meta, $177 billion. Microsoft, $186 billion. Alphabet, $218 billion. And Amazon, $381 billion. Here's where it gets really interesting. We look at the cash from operations and we follow the money. On revenue, over the past 4 years. So in 2021, Apple did $366 billion in revenue, and over the past 12 months, it did $416 billion. They've grown their revenue by 13.76%. Now, keep in mind, they've done minimal CapEx and minimal investing in themselves. Let the record show. Microsoft, revenue up 67%. Alphabet, 49%. Meta, 60%. Amazon, 47%. And then when we think about how CapEx impacts cash from operations, in 2021, Apple was the only company that exceeded $100 billion in cash from operations. Yet their cash from operations has only grown by 7% over the past 4 years. Microsoft, Alphabet, Meta, and Amazon all generate more than $100 billion now. Microsoft coming in with $147 billion, and Alphabet at $151 billion, and Amazon at $130 billion. The three of them all exceed Apple. And Meta's at 107. They're about to exceed Apple. So let's think about this. Apple doesn't invest in themselves, minimal CapEx, and 7% cash from operations expansion. Yet Microsoft goes from 89 to 147, expands 65%. Alphabet goes 91 to 151 billion, expands 65%. And now they're doing 40 billion more than Apple. This is why I'm pissed at Tim Cook. These numbers are why I'm pissed at Tim Cook. Just saying. That's the Apple rant. I'm going to have to go back and look at a timestamp so I can try and timestamp this stuff. All right. Yep, Shake Shack, we got to do it. Hold on. For some reason, my eyes are burning. I don't know why. Let's see. Thank you for everybody liking the video. I really appreciate it. Well, seriously, guys, did Tanner really rage quit and break his monitor? Like, I know that a lot of people are saying this. Did he really? Okay, June, I'm not going to read out loud your comment, but that's hilarious. That's a hilarious comment. Thank you. That's hilarious. Yeah, Tim Cook playing it safe. Not fun. I don't know who I'd want to replace him, but I mean, okay, so Tanner got mad and broke his glasses. You guys gotta be messing with me, right? We're gonna get to the bottom of this, and I can't share it, but I'm getting to the bottom of this right now. I mean, I'm looking at the end of his video. It doesn't look like he rage quit or did anything, but I mean, I also don't have the volume on. He went full Hulk. All right, I'm going to call him. You know what? We're going to call him. We're going to call him, and we're going to see what happened. Mr. Tanner. Why isn't it letting me call Tanner? That's weird. Has anybody ever used WhatsApp and it just not let you make a call? There we go. Here we go. Hey.
What's up?
So I'm not. You're not on speaker. Do not worry. You're live right now. Oh no, nobody can hear you. They can only hear me. The chat is saying that you rage quit your stream and broke your monitor. Is this true? Or is it false rumors? It's false rumors? False advertising? Okay, I'll talk to you later. They're actually saying they can hear you. I should probably put you on speaker. Hold on. All right, hold on. So, yeah, a lot of people in the chat were saying or are saying they must have coordinated this because they were saying you rage quit and broke your monitor.
Yeah, they probably also couldn't even hear me, and they trolled you into doing that as well.
Probably.
Look at them, they're all saying that I'm lying. That's so funny.
I'm a sucker. What can I say?
Dude, you you didn't want to like go back to the end of my stream and see if that happened?
I did, but I couldn't tell because I didn't have the volume on.
Yeah, no, I was nothing like that happened. We had like a 3.5 hour, almost like 4 hour stream. It was good.
All right, well, they're calling
what
you
have you been talking about?
fake news Tanner over here. Okay.
It's fake news, Steve. You're the one spreading it.
Oh, that's funny. Netflix and Warner Brothers, because once again, Stevie Nostradamus came to play. And just like I called the meta stuff over the weekend, I was saying there's no way in hell that Netflix deal gets approved and Larry Ellison's going to come over the top and the administration's going to get involved. And we find out today, David Ellison offered 30 a share from Warner Brothers Discovery, and now Kushner's firm is getting involved with the financing. So looks like Nostradamus, Stevie predicted it again.
There you go, brother.
If you
That's
want,
awesome.
I can send
All
you a link. Up to you.
No. I'm going to continue to work, but
Okay.
let's do Wednesday for sure.
Yep. Wednesday night, Tanner and I will be live, and we'll try and make sure he doesn't break another monitor.
Yeah, I'm down to 3 now.
Okay. Talk to you later.
All right, bye.
Bye. All right. So there you have it. Tanner did not break a monitor. All is right in the world. All right. So for those of you asking where Amit is not feeling well. I texted him yesterday. He said he was really not doing good. Texted him this morning. He said he wasn't feeling good. I told him to go to urgent care and go get some meds. I don't know if he did or not. I'm not calling him. He said he really can't talk. So I don't know. He'll text me at some point. Oh, yes. Shake Shack. We gotta go Shake Shack. All right, I don't even guys. I don't even know what Shake Shack's ticker is. So let's bring up the trusty old spreadsheet. Shake Shack. Shack. I should buy this just because of the freaking ticker. All righty. They're only a $3 billion company. Interesting. Not very profitable. But I guess decent on price, but the margins suck. We're going to look at this against McDonald's, most likely, because that's the first one that came to my head. One too many zeros there. I've only had Shake Shack once, and I don't even remember if it was good or not. I guess this is one of those stocks where I would actually go do in-person due diligence. I have to like the burger. This is expensive for Stevie. This is expensive for Stevie with shitty margins. Just saying. All right, let's see McDonald's. MC Day. Maybe McDonald's isn't the best one. It was the only one I could think of, though. Oh, yeah. If you have these sheets, you can click into things and see the formulas that I do, and you can make your own stuff or just copy this stuff over and make your own stuff. EBITDA. 14,292. Cash from ops. All right, let's see how McDonald's does. Significantly better. Look at that. Night and frickin' day. Night and frickin' day. All right. Are there any other companies that we can compare Shake Shack to? Who are their actual people? Let's see this. Cheesecake, Wendy's are much closer market caps than freaking. All right, I'm actually going to look at restaurant industry and go by market cap. So McDonald's probably was not the best one to use. So hold on. Cake and Kava Group. We're going to do Cake and Kava Group. All right. Let's move McDonald's. We'll do both of them. Cake and Kava. And I know nothing about these companies, by the way. Cheesecake Company. EBITDA. I wish there was a way that I could code this shit so I didn't have to do this freehand. That'd make my life easier. If anybody's a computer programmer, hit me up. I mean, I should probably just ask Gemini how to do it, right? Good old Gemini will probably know. That'll be a project for the weekend. Cash from ops. All right. Cheesecake, shitty margins also, but trades at a way better valuation. I guess I got to look at the forward growth rates next. Let's do Kava, though. Wow, I thought I was typing. I wasn't even clicked on it. Yeah, shitty margins once again. I mean, their profit margin's a lot better. Did I make a mistake? No, I didn't. 137 million. I mean, that's still so expensive for their profitability. Yeah, I would stay away from these, in my opinion. They're not for me. They're just not for me. Chick-fil-A is delicious. They should go public. Delicious. No, I've never looked at Sprouts. I mean, I can't tell you where I would invest. This is what I'll tell you. I like quality over quantity. I'm a big believer in S&P 500. And look, I just became a shareholder in Microsoft. I think it's trading at a great value. I think NVIDIA and Meta are trading at great values. So Intuitive Surgical, man, that's a name that I haven't thought of in a while. SMCI, I'm gonna look at again. We made some money on it earlier in the year. I'll take a look on it. That's one of the only trades I made this year. And just so everybody knows, at 9 o'clock tonight, Chris Patel and I will be on for Inside the Numbers, and we'll be doing a deep dive on Cisco Systems and potentially one other company. I have a presentation on Cisco, so I really like them. So we're going to do that at 9, and Chris and I are known for talking and getting into some other things. So it probably won't just be those. It won't just be those. eBay is a very interesting company, and they do a ton of buybacks. Damn. Look at that chart. Good for eBay. Good for eBay. I am not sure if it's disabled or not. I'll check. Hold on. I don't think it is. I think you're fine. You should be able to send one. I mean, I have everything checked off. Yeah, you should be. If you want to send one, you should be able to send one. So, thoughts on SoFi? I am a big fan of SoFi. I think that this deal is going to be good. I like the fact that they are raising equity at the current share price. I think if you don't trust Anthony Noto and Chris Lapointe, not Chris Hager, Chris Lapointe, shouldn't be in the stock. So last time they did this, they created value for shareholders. So I am very bullish SoFi still. So we'll see what happens. Oh, Rusty, you read the Seeking Alpha article on Cisco? Thank you. I spent a lot of time on that one. I think I spent more time on the Microsoft one, though. I spent a lot of time this weekend doing those articles. Let's see. Yeah, I mean, look, I like SoFi. A lot of us have been in it for a long time, so ABEO. I've never even heard of them. Oh, I like Chevron. I mean, I talk about Chevron. I wrote an article on Chevron not too long ago. Hold on, CVX. When the hell did I write an article on them? Have I not written an article on them in a while? Shit. Really? No, that can't be. Yeah. September 19th, I wrote an article on them. Here you go. That's the last one I wrote on Chevron. Yeah, not to be confused with Carvana, the freaking vending machine freaking car company. Ridiculous. Yeah, EOG is interesting. I like EOG. Where did everything finish today? Yeah, SoFi 2761. I don't hate that. I don't know what BTQ is. I'm sorry. We do need milk vending machines. I gotta tell you, that'd be a great idea. Yeah, Pamela, I'm with you. TSM, great company. I can't believe I don't own it. June, Rocket Lab. Yeah, I know. I should have bought. I should have listened to Matty Money, but I didn't because I'm ridiculous. So I don't know. AMKR. A lot of people tell me that. Can I expand what I know about Enbridge? I mean, what do you want to talk about with Enbridge? You want to talk about that they're the largest natural gas utility company in North America? You want to talk about they're one of the largest pipeline companies in North America, or that they have the largest or one of the largest renewable portfolios in North America? I mean, huge exporting on the Louisiana coast in the Gulf of America. So, love Enbridge. I don't know anything about Bloom Energy. I'm sorry, I don't follow them. Yeah, NVIDIA did get the green light. I'm going to ask Chris what he thinks about that tonight. Let me make a note of that. I listened to it on the way home. They got the green light for the HB200s. I'm scared for Adobe here, guys. I'm very scared for Adobe. I think Enbridge is different than ET. We know the answer to that. Amit has not watched the Rocky series. Oracle reports tomorrow, Wednesday, I think. We need to see what they do. I'm not bearish on anything in the Mag 7. I just think Tesla's so overvalued, it's disgusting. Yeah, Amit, he texted me. He watched Rounders yesterday, a movie he's already seen. Go figure, right? Go figure. Can't knock it, though. Rounders is an amazing movie. Do not splash the pot. Yeah, I'm not buying Oracle. I'm not playing Oracle. Oracle scares the shit out of me. If we don't get a rate cut and if Oracle freaking misses, the bear's going to come out of the woodwork. AI bubble, blah, 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 blah. So. Yeah, we got Broadcom this week also. You're right. We got Broadcom this week. Whoa, Greg, you found QXO at 12. My man. Good for you. Congrats. I used to have Fortinet. I do not have it anymore. The Fed meeting is tomorrow and Wednesday. I started looking into Howard Hughes. I didn't buy it, though. Steve is buying Hood when the sun doesn't rise. I don't know. I have no idea. I do not own VJ. Yeah, I need to look at SMCI again. Did I send Amit chicken soup? I did not. China is a big deal for NVIDIA because there is speculation that the Huawei chips are not as good as the HB200s, and NVIDIA will be able to sell a lot of chips there. I do own VC, but I'm worried about the casino stocks, which would be bad for freaking VC. I mean, best energy dividend stock depends what you're looking for, you know? A lot of MLPs have a K1, some don't, some issue a 1099 because they're a C Corp. If you just want a traditional equity, I like Chevron. But I mean, Energy Transfer is awesome, but you got to schedule K1 with it. Tanner has not been able to convince me on Shift 4 now. I like Kinder Morgan, Rusty. Oh, whoa. We got a very serious question here. We got a very serious question. Strawberry milk or chocolate milk? It's very serious. I can get down on both without a question. But I got to give it to chocolate milk. Got to do it. But I can get down on freaking strawberry milk. No question. Let's see. No, I haven't looked at Unity. Oh my God. What is the highest dividend stock? I have no idea. I own a lot of different stocks. I have no idea. No, I think it's going to be a good market next year. I'm more worried about unemployment going up in a recession potentially in second half, but I think we see a good year next year. I've actually written several articles on Devon Energy. It's a good company. You really want Matty Money to discuss Devon, not me, but I like Devon. I can run the numbers again at some point. Driving in New York was very interesting today. It's always interesting. I don't day trade, but you know what? Every day I think about just freaking taking 2 weeks off from work and just day trading. So love Realty Income. Love it, love it, love it, love it. I mean, I started doing a dedicated stream for alternative assets, and not a lot of people were watching it. So I've actually been using Sunday nights to work, believe it or not. Do I know how to day trade? I mean, I don't think it's that hard of a concept. I'm pretty sure that I could teach myself within a day or two. Not saying that I would be great at or anything, but I don't think it's that hard with the amount of research I do. I don't have a favorite dividend stock. I mean, in all seriousness, I was thinking about taking time off, whether it was a couple of days or a week, and just freaking starting a new account, dumping money in there and live streaming myself, teaching myself how to day trade and actually day trading. So that may happen next year. We'll see. No, I haven't done TLT. I like TLT though. Well, think about it. I didn't say I would be good, and I didn't say that I was gonna go crazy with it, but it's freaking day trading. Like, how hard could it be to understand the concepts and actually learn how to do? Not saying that every trade's gonna work and I'm gonna make money on every trade, but it's not hard to learn RSI and other terms and memorize patterns. Now, executing is a different story, but the actual fundamentals and understanding it, probably learn that in an hour or two. It's not that hard of a concept. And keep in mind, I'm not going to be day trading on stupid penny stocks. Like, I'll be day trading on NVIDIA and freaking Amazon. Like, that's where a lot of people get into trouble. They day trade on stupid shit that's extremely volatile. Think about it. I work a real job that's very high stressed, and I'm in meetings all day, and I still find the time to do 5 articles a week on Seeking Alpha and stream on YouTube a bunch. If I cut back on Seeking Alpha, I could teach myself how to day trade, no problem. VG, worst IPO in history. Interesting. Oh, that's right, Asian Steve. I gotta get in touch with him and have him do an episode with me on TA. That'd be great. Do not cut back on Seeking Alpha. All right, maybe I'll just take time off from work then and teach myself how to day trade. And I'll freaking stream teaching myself how to day trade. We'll see. Do it, I dare you. I mean, DS, in all seriousness, okay, think about it. If I say that I'm going to teach myself day trading, okay, and then I say that I'm going to day trade NVIDIA in a different account, if NVIDIA goes down, I'm just going to hold it. Like, I'm not going to exit. And I'll be utilizing cash secured puts and call options to get, don't worry about it. I won't be losing money. I'm not going to invest in anything I wouldn't. So here's the thing. I'm not going to day trade anything that I wouldn't want to hold long time that I see value in, because if something gets away from me, I'll just freaking hold it. Like, live stream going to pick up the dairy, that'd be funny. Can I read a chart? Yes. That's a great name for a day trading show, Milk Money. I love it. The FOMC predictions are that they're going to cut. They don't have a choice. They got to cut. So. Don't be a sour milk when you go bankrupt. That's funny. No, my camera's not shaking. I'm hitting my freaking desk with my foot by accident. Yeah, Charles, a lot of people are hating on VG right now. Pretty crazy. Oh, Zim? No, I don't know anything about that. All right, everybody. Yes, I'm still bullish on BMNR. No, I have my feet on my tower and I'm kicking my the leg of the desk and it's shaking the monitor. So this is what we're going to do. Chris and I will be back at 9 o'clock. I'm going to go get some dinner. I'm going to get my presentation prepared. And Chris and I will be back for Inside the Numbers at 9 o'clock. The link is already live. I will see everybody in an hour and I'll be ready to go. So go have some dinner, make some coffee, hydrate, get comfortable. We'll be back in an hour. See everybody soon. Thank you for joining this stream. Really appreciate it. See you in a little bit.